Financial privacy in the American banking system is a myth. It just doesn't exist. But it wasn't always like this. So today, I'm going to go through 5 of the major federal laws. There are more, but I'm going to go through 5 of them from Nixon to Biden, from 1970 through 2021, that have turned banks into a tool of the national surveillance state. But first of all, before getting to that, welcome and thank you for joining me here on the path to liberty. I'm Michael Bolden with the 10th Amendment Center, and this is the Fast Friday edition of the show for May 31st, 2024. And let's get right to it. This first act is the Bank Secrecy Act, signed by Richard Nixon back in 1970. As Mike Meharry put it in a new article, he said, the law was ostensibly passed to prevent wealthy people from hiding money in overseas bank accounts. What a surprise. Another surveillance tool, which is really a tax collection tool, is what it is. And that's how Mike puts it. In other words, it was a tool to help enforce tax collection. The IRS is going to come up again on this too. Mike says, in effect, the BSA allowed government to access banking records without notifying holders. It requires banks to collect all kinds of information. They wanted more detailed records of people's financial transactions, so the BSA requires banks to collect and keep records of cash purchases of negotiable instruments like cashier's checks. It also requires banks to verify and record the identity of any person purchasing money orders and checks over $3,000. It implemented rules requiring banks to report suspicious activity, and we'll see SAR, suspicious activity reports, expand throughout this process because they report any suspicious activity that might signify money laundering, tax evasion, or other criminal activities. And Mike says perhaps most significant there, the BSA mandated that banks report any transaction over $10,000. Remember that because inflation affects this as well. But in 1970, anything over $10,000 to the U.S. Treasury Department. So any transaction over $10K has to be reported, and the Treasury Department is going to track that, or maybe going to look into it a little closer. Currency transaction reports, or CTRs, they require them to include deposits, withdrawals, other financial activities, etc., etc. And in a really great video with my favorite privacy activist and expert, Naomi Brockwell, I've got a link to this from her Odyssey channel up on the screen. That'll be in the show notes at 10thamendmentcenter.com/path-to-liberty. She interviewed a really great policy analyst from Cato, one of the good guys over there, Nicholas Anthony. And he said that this Bank Secrecy Act, this reporting thing, was a fundamental shift. And he described it like this. All of a sudden, we're forcing people working in the financial industry to report other Americans to the government for really nothing more than using their own money. Basically turning everybody into a narc. It's pretty bad stuff. Mike says, in effect, the act put a federal agent in the room monitoring financial transactions all the time. And in practice, the Bank Secrecy Act undermined the expectation of privacy that people held when doing business with their bank. Prior to 1970, prior to this act, banks generally decided what information they wanted to gather and what they wanted to keep on file, how long they would keep it on file on their customers. This information was almost exclusively in the possession of the banks, and it was very rare that it was shared with the federal government. This turned that around, basically saying you're going to have to monitor basically everything all the time. You don't have to report too much to us, but we know what government does. Once they have a precedent for one thing, they're going to expand it to more and more and more. And that's exactly what went down. Now, before getting to the next one, Meharry points out this inflation problem. Of course, we have the Federal Reserve ramping up the printer, especially throughout the 70s and since then. And in 1970, he says, $10,000 was a large sum of money, equaling about $83K today. But due to inflation, which is an increase in the supply of money and credit, due to inflation over the years since the passage of the act, transactions above the $10,000 threshold are much more common. As the dollar depreciated in value, the number of people and individual transactions swept up in the surveillance dragnet increased significantly. So next up is the Money Laundering Control Act, signed by Ronald Reagan in 1986. And this goes back to those CTRs, those currency transaction reports. Mike writes that along with making money laundering a federal crime, This act criminalized structuring financial transactions to avoid filing these CTRs. They know people would learn that, okay, it's a $10,000 and they have to file this. Well, maybe I'll do $6,000 and $4,000 or $5,000 and $5,000. So this made it federal law that two $5,000 deposits, for example, in a short amount of time could be construed as suspicious and then lead to criminal charges, or at least monitoring you, or at very least, they're still tracking what you're doing. It's not an if you got nothing to hide, you got nothing to fear. Why not just open your door to everything, right? That's the mentality, of course, they want us to have. Now, the third on the list is the Annunzio, and I'm pronouncing this wrong, I'm sure, Wiley Anti-Money Laundering Act, signed by George H.W. Bush in 1992. Meharry called it a significant expansion of the Bank Secrecy Act. It required banks to file suspicious activity reports. We call them SARs. This put the onus on the banks to report not only large deposits and withdrawals, but also transactions that fell under the nebulous term suspicious. And he said SAR reporting can be easily triggered for all kinds of reasons. He goes through a number of them in this article, which will be linked to in the show notes. Basically, banks are collecting tons of information, and because they don't want to get penalized, they kind of lean towards doing it a lot. And Mike says the financial services industry in the U.S. has filed 26 million regulatory reports under the Bank Secrecy Act and subsequent acts. The number of SAR, suspicious activity reports, filed have increased exponentially over the years, from around 62,000 in 1996. If you think about how much this expanded, the law was signed in 1992. In 1996, there's 62,000 suspicious activity reports from the banking system to the federal government, to 3.6 million in 2022. And Mike points out that the banks face heavy fines for violating the BSA and for failing to report suspicious activities. So as a result, most banks err on the side of caution and over-report to the feds. And that's how Anthony described it in that great interview with Naomi Brockwell, that great video, which was an inspiration for Mike's article here and this episode here as well. He said, no one wants to be caught saying, I missed that one report, the one needle that was in the haystack. So instead, take the whole haystack and send it to the government. And really, if you think about this logically, requiring or out of fear, making the banks turn over all this information to the government is a really bad tool for catching criminals, because finding a needle in a haystack is not an easy thing to do. That's the reason that that's a saying. So it actually is counterproductive as well, at least in my mind. Mike says, in effect, the feds are using the financial industry to collect bulk data without a warrant. It's not just the NSA. It's not just the FBI. It's not the DEA and the ATF. It's everybody. But the banking system is a big part of this. Everyday Americans are subject to the surveillance dragnet for the crime of using their own money. But when Nixon signed the Bank Secrecy Act, it did include provisions requiring the government to notify individuals if their financial activity was being examined. But the 1992 Act, the Annunzio Wiley Anti-Money Laundering Act, repealed those provisions and put a veil of secrecy over financial surveillance. So what do we get? Banks went from being responsible for the privacy of their customers to being forced to being responsible for the privacy of government surveillance. So awesome, right? Next up is our great favorite, the USA Patriot Act, signed by George W. Bush in 2001. I'm amazed it seems so long ago already. But it did expand financial surveillance in a bunch of areas, Section 311 through 320 something. There's a bunch of areas. But what we really focus on, at least in this article and in this episode here, is the KYC, Know Your Customer requirements. And Mike writes that one provision of the Act imposed these requirements in banks in a much broader way. Under the law, the Secretary of the Treasury was empowered to set minimum standards for customer identification, to keep records of the information used to verify their IDs, and to compare their customers with lists of known or suspected terrorists. I mean, it's basically they're just having to track and keep information on everything in case it hits a match list, and then they report that. Government is using this through fear. We're going to catch bad guys. I think it's really a tax collection scheme, but that's a different discussion. Mike points out that it also requires banks and financial institutions to assess a customer's riskiness and the likelihood they will commit financial crimes. Oh, man, that just the mentality of saying, well, you might do something bad as our customer, so we're afraid to do business with you. We're not going to accept your account, or we're just going to report you. This is not the American way, or maybe it is, unfortunately. So next up, if you want to learn more about that, Mike covers it a little bit more detail than I am here right now. Next up, we have the American Rescue Plan Act of 2021, signed by our good buddy Joe Biden. And in that one, it was supposed to be, a relief for the pandemic, but it also included a new rule which substantially lowered the filing threshold for issuing Form 1099-K if you do contract work or side work. This is a very common thing. But originally or previously, that would be for a total amount exceeding $20,000 and over 200 transactions in a year, to gross payments exceeding $600 and no minimum transaction requirement. So if you pay someone or you receive payments in this 1099-K, you would have to report, if you're sending payments, you have to report only that if it is over $20,000 and 200 plus transactions. And they're just dropping the transaction limit and the total amount all the way down to $600. Basically, anybody doing 1099s. When the rule became public, Mike said, it generated significant pushback. And the IRS responded by saying it, quote, already has information on wage and salary income and the federal benefits people receive. In other words, hey, we're already spying on you. And that's how Anthony put it. The government said the quiet part out loud, quote, they kind of broke the veil and said, that privacy you think you have? You don't have it. And in fact, it's been so long since you've had it, you actually shouldn't be upset about this. You shouldn't have a problem with us surveilling you because we already surveil you. Now, there was a lot of kind of outcry. Some people complained that it would just be too difficult logistically. Other people are saying, man, you are basically turning everybody into a spy. This is bad. We know you say you are monitoring everybody anyways. But if you wanted to kind of get out of that system, you just be an independent contractor, maybe, or you hire independent contractors, maybe it's, not as detailed. I don't know. But the IRS decided to back down on this, but don't think that they were stopping it completely. Of course, government, sometimes will see a setback and then kind of wait. And that's really what the IRS did. They delayed implementation of the rule, but the IRS is very clear. They are going to implement this. And in November of 2023, just less than a year ago, they pointed out that the pause is only temporary and they are going to phase in implementation. And that's the title of their press release that'll be linked to in the show notes. You can read it yourself. IRS announces 2023 Form 1099-K reporting threshold delay for third-party platform payments. Plans for a $5,000 threshold in 2024 to phase in implementation. Now, I'm not 100% certain because I'm a little bit late on my filing. I did an extension and have to do it in October. So I guess I'm going to have to learn exactly what goes down here because you never know. I mean, we have a $5,000 threshold. It used to be $20,000. Then it was going to be $600. People are freaking out about not knowing, and then they're switching stuff around. I like the idea that they're delaying implementation of this stuff, but we also have to recognize that it's only temporary. Now, in effect, because of these federal acts, and there are other ones as well, but these are the big ones, these 5. Banks went from being responsible for the privacy of their customers to being surveillance tools of the government. And Mike Meharry sums it up like this. This is part of the broader surveillance state that grows more sweeping and intrusive by the minute. In effect, the federal government has weaponized the financial system by creating tools to track anybody it chooses. Well, I hope you guys found this interesting. I hope it was educational, more important than anything. I hope you learned something. If you want to help us reach and teach people with this, more and more people with this essential information, and more importantly, about the Constitution and liberty and how to defend both when the government refuses to do so, which is, well, to be honest with you, it's constant. It's 24/7, 365. Nothing helps us do this work more than the financial faith and support of our members. And while we're talking about the banking system, if you got a couple of bucks of that dirty government fiat, I hope you'll please consider throwing a few bucks of it our way. Our membership program starts out at just $2 a month. We also have annual, 5-year, and lifetime options over at 10thamendmentcenter.com/members. If you prefer to make a one-time donation, of course, you can mail stuff in. You'll find the address and all that stuff over at 10thamendmentcenter.com/donate is another option. Of course, we will have the show notes published for this episode in a couple of hours. Alan Mosley will get that organized. I'll get it published over at 10thamendmentcenter.com/path-to-liberty. I really appreciate you spending some of your time with me today. I hope you enjoyed the episode. I hope you have an awesome weekend, and I hope to see you next week here on the Path to Liberty.